Hello everybody, my name is Javier and I'll be your presenter today. Today I'm going to show you a simple technique that is very powerful and accurate. And with this technique we're going to make it between $300 and $500 in a week. Okay, so if you need extra money you can use this simple technique. Alright, over the years I've been trading Forex for over 5 years. I went to school, I got my master's degree in economics, trying to learn a little bit more about currencies and how these currencies work. Okay, I've been doing a lot of research, a lot of trial and error as well, and see which currencies work the best and perform the best using this simple technique. Okay, this technique, it's very accurate, it's very powerful as well, and also it's very simple to use, and that is why I'm going to show you today. This this video is intended for people who do not understand anything about the Forex market, or somebody that has a basic knowledge on the Forex market as well. Okay, for those of you who do not understand what is Forex, let me explain a little bit about Forex and how Forex work. Okay, the Forex market is the largest financial market in the world. Nearly 4 trillion worth of foreign currencies trade back and forth across the Forex market every day. Okay, Forex stands for foreign exchange, the financial exchange on which governments, banks, international corporations, hedge funds, and individual investors like you or me exchange foreign currencies. For instance, when you fly to another country, one of the first things you do when you get off the plane is look for a currency exchange counter where you can exchange your US dollars for whatever currency is used in the country you are visiting. Let's say, for example, that you are flying to London, for example, to London in England, and then you need some British pounds, right? If you go to Japan, for example, in that case you probably will need some Japanese yens. Or if you go to Germany, for example, probably you're going to use euros. Okay, why do you do this? Because you know that the cab driver, the hotel clerk, and the souvenir salesperson are all going to want you to pay them in their national currency, not in US dollars. Okay, when you slide your US dollars over the teller and he or she slides back a stack of multicolor bills, you are participating in this market, in the foreign exchange market. Okay, those of you who travel abroad frequently have probably also noticed that the exchange rates at the currency counter at the airport never seem to be the same. They are constantly changing. Sometimes you get a lot more bang for your buck when you exchange your money, and sometimes you have to exchange a few more US dollars just to get by. That is because exchange rates are constantly changing, and it is these changes in exchange rates that enable you to make a lot of money in the Forex market. Okay, when I was looking for extra income, right, a few years ago, I was not planning to have a part-time job. I didn't want a part-time job. I wanted something that I can do it from home, and I tried different products. None of these work as well as Forex market. One of the things is because this Forex market is open 24 hours a day. Okay, starting on Sunday, and depending on the time of the year, but it can be between 4 and 5 p.m. Eastern time, all the way to Friday 4 p.m. Eastern time. The market's open for you. All right. So with this is one of the advantages. So I can go 1 in the morning, 3 in the morning, 5 in the morning, 10 a.m., 5 p.m. in the afternoon, for example. I can do it, and I can trade currencies right here. All you need is a computer, all you need is a broker, and obviously the internet access, so you can have that. Okay, some of the advantages is, first of all, I'll say before, is the market size. Nearly $4 trillion. When we talk about $4 trillion, that means that it's very liquid. Okay, so we don't have problems buying or selling instantly. We don't even have to wait for a minute to buy or sell currencies. The same, I mean, if you're buying and if you're making, let's say, $50, $60, $70 in 10, 15 minutes, you can get out any minute. Okay, and there won't be any restrictions at all. Okay, easy to entry. That's one of the reasons why it is really easy to enter. You can buy and sell right away. Okay, and also when we talk about easy to entry, you don't have to be rich to trade in the Forex market. Everybody deserves to be able to protect his or her financial future, and the Forex market makes this possible by offering an extremely low barrier to entry. In fact, you can open a Forex account with as little as $50. Yes, you heard me right. $50. In the United States, you can open it with $50. Okay, 50. Obviously, you're not expecting to make $300 with $50 that you have in your account, but you can make some cents or even a few bucks pretty much. Okay, so the technique that we're going to use today is intended, let's say for example that you have $1,000 account. That's the basic thing. For this account, for this technique, you need to have $1,000 in your account to make between $300 and $500 a week. Okay, so can you imagine $300 with $1,000 account? Nobody else offers you this. All right, first of all. Secondly, the return on your investment is huge. We're talking about 30%, between 30% and 50% in 1 week. All right, that's great. The best thing, you don't have to work, you don't have to drive, you don't have to stay in a place that you don't like. You can be at home, you can be watching your computer while you watch TV as well. And this technique works a lot. I mean, really good. Okay, there are some profit potentials. As I said before, nobody can give you between 30% and 50% return on your investment. Okay, tax advantages. There are some good tax advantages. We'll get in deep in another session, but there are some tax advantages when you trade Forex. Trading hours, as I said before, you pretty much trade 5.5 days, 24 hours during those days. No commissions, you don't have to pay any commission, only the spread. Okay, increased leverage. When we talk about 30%, 50% return on your investment, for that matter, we need to use a lot of leverage. Okay, but based on my research, based on what I've been doing for the past 5 years, this technique is very safe. Okay, it's not very risky. Obviously, I've been developing this technique for you, and hopefully it works perfectly for you. All right, so the first thing, once you open an account, the first thing you're gonna see is an icon on your desktop. You just double click on your desktop and you will have exactly this. Let me just take some of this stuff out so we are in the same page. Okay, let's get out of the Fibonacci, delete. Okay, so once you open an account, you will see something like this. Alrighty, so for this specific technique, we're going to use the British pound and US dollars. As you can see right there, you can change it in here if you want a different currency pair. Right there in this plus sign right there, green plus sign if you will, or cross. Okay, you have different time frames right here. For this particular technique, we're going to use the daily frame. Okay, the daily one. You have a monthly, weekly, daily, 4 hour, 1 hour. We're just going to use the daily one. Why do we use that? Why do we use this one? First of all, because it's the most accurate one, has a lot of data, and can show you exactly what the currencies are standing at this specific point. That's the first thing that we're going to do, is going to use that daily chart. All right, the second thing that we're going to use is we're going to use one of the technical indicators. One of the technical indicators I like to use is the Fibonacci. Okay, and I'm going to explain why the Fibonacci in that other. All right, so to get the Fibonacci, and I'll explain in a minute, you have two options. You can go and insert, go to Fibonacci, and we have the retracement right here. Just double click and you will have it. But for mine, since I'm more familiar with the easiest way to do it, is just go over here and you will have the Fibonacci retracement. So just click there. For this technique, remember, we're on the daily trade. What we're going to do is, obviously, we are going to use the Fibonacci retracement from a low point to a high point. Okay, one of the things that I like to rely when you use the Fibonacci is pretty much use a 6-month time frame, if you will, no more than that. Okay, why? Because what we're looking for is a specific time frame that can be very accurate when we use the Fibonacci. Right, in this case we're going to use between February all the way to June, so about 4 months. All right, it will give us some details. With the Fibonacci you can do two things. You can start at the bottom and go all the way to the top, or you can start at the top and go all the way to the bottom. Okay, so we're looking for a high point and a low point, or a low point and a high point. Okay, so with Fibonacci, again, just going to grab it and looking for a low point. Usually rely on the body instead of these long tails right there. So if we go on the body, we just click there, go all the way to the top, right there. Okay, I can be more precisely if you want to, but for this particular trade I don't need to do that. All right, so we see that the body is right there at the Fibonacci retracement. Okay, so before I move on to the pretty much the transaction, let me explain a little bit about the Fibonacci and how the Fibonacci works. Okay, just to let you know, most of the traders or investors, they use the Fibonacci. All right, the Fibonacci, it's very important to know. One of the things is because most, as I said before, the investors and traders, they use the Fibonacci because it's very reliable. They follow it, so we're not the only ones that doing this. Okay, there are a lot of people that use the Fibonacci sequence, the Fibonacci retracement in this case, because it's very accurate and very reliable. So either when tops, once we create the Fibonacci, we'll be able to use it with very confident, pretty much. Okay, the Fibonacci analysis is an exercise in identifying levels of support and resistance during both trend retracements and trend continuations. Okay, when we talk about support and resistance, okay, what we're looking at right now is exactly that. Support at the bottom. If you don't know what support is, pretty much you can think about the floor. The floor will be the support. So if you throw a ball on the floor, what happens usually? A basketball, for example, it will bounce. Okay, so yeah, you can look at the support as the floor. All right, so the Fibonacci is giving you exactly that, or giving us exactly that, support and resistance. All right, this is a resistance, or you can think about the ceiling as a resistance. If you throw a ball to the ceiling, what will happen? Probably will retrace, right? And that's exactly what we're looking for. All right, and with the British pound and US dollars, we can look at right now that it's at the support level. All right, and it is a really strong support level. How do I know that? Because in February, as we can see in here, at the end of February, beginning of March, it was there at that specific point, coming from a long downtrend, touch that line or that specific support level, and then bounce. Okay, bounce all the way to starting from one point, pretty much 48.99, and getting close to 155.93 or so, 55.89. Okay, so he moved a lot, right? So that's exactly what we're looking for with the Fibonacci. Again, in here, during a resistance level, you touch the floor, bounce, and get into a really strong resistance level, just barely. At the beginning of June, the end of May, it was there for a few days. So when we look at these specific lines of support and resistance, we want to make sure that those are strong support or resistance. Okay, so the more accurate we can pretty much predict the next movement of the currency pair. So in here we saw that it was there for 1, 2, 3, 4, 5 days before bouncing back. In here at the resistance level, we see that it was touching there 1, 2, 3, 4, 5 days again before retracing. All right, so at this specific level that we are right now, we were there before. Okay, so with that we can make it more accurate. So we think it's going to bounce back. So we think this currency pair is going to move back up again. All right, so it's going to bounce, and this is the next movement that we're going to do it. In fact, if we're going to bounce back, we're going to buy it. We're going to buy when it's going to move up, and we're going to sell once it's going to retrace. Okay, we're in the stage that we're at the support level. Alrighty, so that's the Fibonacci, and we think it's going to bounce back based on the support level that is trading right now. Alright, so how are we going to make the trade? We look at the Fibonacci, we think it's going to bounce back. Alright, so based on my experience, and this, remember, this specific technique, we're going to use the leverage. Okay, in here the volume is pretty much telling you how much leverage you're going to use. Okay, with $1,000 account, we can go all the way to 3. Okay, and I'm going to explain what that 3 is, but don't go above that. Why? Well, because based on my research, based on my experience, it starts getting riskier. Alrighty, so with this one, we are going to be very aggressive as well, but very conservative at the same time. So use the volume 3 with $1,000 account. What we're doing with that volume 3, we're saying is every time this number right here, remember, it's going to bounce back, so we're going to buy. So we're just going to look at this number. Every time this 1.4901 moves, let's say, to 1.4902, we're talking about 1 pip. So from 4901 all the way to 1.4902, it's going to move 1 pip. Once it moves to 1 pip, we're going to make $3. Okay, so if we increase or decrease this, it will move based on what leverage we're using. So if for instance, for example, we go on 4, so instead of moving $3 every time this number moves to 2, we're going to make $4, okay, or less if you want to, all the way to $8. Okay, but in here we'll get really risky. All right, and I've been there. I walked through this before, so you don't have to do it. That's the beauty about this. I did that for you. I did all the research for you, so you don't have to go through this process again. Just trust me. All right, so we go on a 3. We're gonna make $3 every time this number moves 1. All right, now based on my research and experience as well, once it bounced, it will take between 2 and 3 days to move between 100 and 200 pips. Okay, on average, the British pound US dollar tends to move between 50 pips and 100 pips, okay, in one single day. All right, sometimes it's higher when the volatility gets higher, but on average it's between 50 and 100 pips. All right, so in a week we'll have plenty of movement to make between $300 and $500. All right, depends on your risk appetite. If we're looking for a 300 pip, for a $300 increase, what we're going to do is probably we're going to move 100 pips. Okay, so the next level that is going to touch is this level. It's acting as a resistance for us, but it was the floor before. Okay, so we're going to trace there. All right, and here we have about 1.5015. All right, so we're talking a little bit higher than 100 pips in here. I'll explain the pips later on, but for that technique you can go all the way here and make about let's see, so 16, so 48, $348 in one single trade. You can take between 1, 2, 3 days for that. If you want to make $500, probably we have to stay there for a little bit longer and increase our movement. Okay, so in here it will be plenty to go all the way to 1.5106. So we're talking about 200 pips movement, a little bit higher than 200 pips. So in this case we're looking at $600, okay, at the end of the week. But for this specific reason, I'm going to use a conservative approach, and I'm just going to go all the way to 1.5015. Okay, so for that matter, we're going to make about $350 with this specific technique. Now, if you're a risker again, if you want to get longer, you can do it. Definitely you can. But let's keep conservative, so we're going to make it about $348 or $350. Okay, so you go new order. right? We adapt the volume to 3. Don't do it farther than that. It's fine. And then you can do it at the market execution. Remember, the market is open at 5, between 4 and 5 p.m. Eastern time, depending on the time of the year. But if you're in summer, for example, the United States, it's at 4 p.m. Eastern time. During winter, it's at 5 p.m. Eastern time. Okay, Sunday at that time. So what you do is just create that, and you can buy by market. Okay, once you click that, you'll start moving. Okay, so that will be the trade pretty much you're going to do for the week. And with this specific technique, you're planning to have between $300 and $500 in one single week. Okay, is that possible? Yes, it is very possible. With this specific setup, with the Fibonacci retracement, we can get that amount of money. Okay, it's simple, it's useful, and it's very reliable, and I hope it can help you make some money. Okay, I'll do it. This is the trade I've been waiting for, and this is exactly the setup perfect for this technique. Okay, I hope you like it, I hope you enjoy it, and you have a wonderful day. See you next time. Bye.